Hey everybody, David Skrick and try to get this out before the open. So we're seeing, let's get right into it, right? We're seeing the market fall here. So what's happened, what we've kind of seen is, I'm going to talk about NVIDIA in a second. So disclosure, I do own a little bit of the NVIDIA short ETF. So we're seeing the here. It looks to me like this is some kind of technical buying, trying to keep the futures above 5,000 on the S&P. Now, it'd be roughly, I think 48 to 4,900 would be its bear market, down 20%, which tells you like, we're down 17, 18%. This isn't like, whatever. So, so we'll see. I think for a reversal today, it would have been more positive if actually everything got down, like say, like it was overnight, like everything was down 3% and then you reverse rather than this. So I don't know if this will be a bottom or the bottom. We're going to see a lot of volatility in the coming days. So in terms of like everything that's going on politically and with the tariffs, et cetera, there's a couple things I'd like to say. The first thing is like I think it's a whole. This is a mess, and the reason I say that it's kind of a mess is quite frankly this from this perspective that like I saw overnight there was a report that Taiwan is willing to go to zero tariffs, and of course Europe and China and some of the big boys are going full in against the U.S. And I don't think other larger economies like South Korea and Japan are going to relent either. So, so you have this mixture of people are going to fight the U.S. A mixture of some people, but like there's nothing in between. Like for example, if the whole point of this is to move manufacturing back to the U.S. or get revenues off tariffs, these countries that are countering with zero tariffs, that kind of defeats that they do actually, in my opinion, they're the ones who's really are really smart in defeating Trump, because all of a sudden, like if Taiwan makes tariff zero, first of all, you're kind of calling Trump's bluff, right? Because if you make your tariff zero, then it's like you're going to still produce all the chips in Taiwan and ship them to the US. And he doesn't want that, right? So I don't, well, how he'll react to that, and he'll probably say, oh, they're cheating in other ways or something like that, right? And secondly, the reason I was worried about the market, kind of all year, and most of my positions were pretty defensive or my turnaround plays and stuff like that. And but what I didn't really like was the whole rhetoric. Yeah, I know like a lot of people like to jump on the bandwagon of these things, and Canada's a 51st state and the annexing of Greenland. I thought this is very dangerous rhetoric. I don't like that kind of thing. And it's not very becoming of the leader of the so-called free world, right? So I didn't like that. That gave me like really bad vibes. I know I have a lot of Canadian friends who hate Trudeau. I can't stand Trudeau myself. I actually have one of those F Trudeau flags in my house, so it's like I'm not a Trudeau fan, but like I was like, you were blinded by your hate of Trudeau and not seeing that Trump was acting totally inappropriately, So, the polls have showed that like 60 to 70% of Americans don't want tariffs on Canada. It's like it's quite ridiculous. So that really worried me. And then, yeah, I hate to punch somebody when they're down, but this is the Trump. And I didn't like this kind of thing, pumping your own mem coin when you're president. Like, come on, right? But you can see this was the hype and this is the reality. So this thing, I think the actual launch price was $4 or whatever. That was the I guess the IPO or the coin ICO price. And then, it gapped all the way as high as almost 80. I think, you can see the high was 75 and now it's 7. And you see the open was about 17 the first day and it closed at around 27. And, you can see we're actually like 50% below where the open was that day. So, and even more, even further below that. So, and yeah, so and maybe this is like a kind of litmus test for what people kind of think of what's going on as a whole. So one thing, and last thing I'll talk about with the trade stuff is that's the issue right now. We're looking at the VIX and looking at all these indicators because we've never seen anything like this since World War II. Like I think the most comparable situation was when they shut down the entire global economy for COVID, right? Everything just shut down. Well, now we're kind of shutting down this whole economic system of trade, and we're kind of shutting the whole thing down. And that means it's going to lead to a lot of volatility, and who knows what can happen. And I remember in COVID, if you remember, the market fell 30% very quickly, and the VIX went to 80. So I don't know. Maybe that will happen. I don't know. So what I do know is this: we are definitely seeing like it's interesting. We have all these key areas. Like I said, the S&P is they're trying to hold this 5,000, right? As you can see, that's right here. And you can kind of see there's some support right around 5,000 at this correction that happened last April, right? And we can also see that if the S&P goes to this 4,700, basically takes away all the gains of last year, of 2024. So that's basically, and then after that, like I said, there's that 47, and really talking 4,100, this low here is the next major support. Like I would consider this to be very minor support at the 46, 4,700. So we are very oversold. The RSI you can see is 23, etc. And then it's interesting too. So when I was looking at NVIDIA, when I took my little short, I just looked at this chart, right? And the question is, you can see this consolidation that happened here, and it didn't break support. But also note that the 150 and 200-day moving average is held in this 2023 correction here. And same thing here. We had this correction and this, and then a slightly new higher high, but this wasn't a significantly higher high. This looks like a big topping formation to me in NVIDIA going back to like the middle of last year. What was interesting is NVIDIA can see gap down on its earnings, even though their earnings were good, because people were getting a little more, suspicious. And then you can see it rallied back here. And sorry, the earnings were here. Actually, they fell on earnings here. And then you can see it's broken. And look at the moving averages are starting to flatten out and roll over. So again, we're talking about these support levels, S&P 500. NVIDIA is right here at 90 in pre-market, right? You can see the 90 is here. That's that. And then the next support is about 75. So same thing. It's like NVIDIA is trying to hold. And then if we look at Bitcoin, we can see Bitcoin is 77,500. That's actually here. It went below it a bit, went to 75,000 this morning, but we're right at this little support level, which was the low of the last decline. But same kind of thing, breaking through the moving averages. Now the question is, you kind of look at this consolidation here. Is it like this? And then we see another high. I don't know. Bitcoin has held in pretty well on this decline. So we'll see. I do have a small short position on that. And again, don't take it as an anti-coiner thing. It's just that I believe like Bitcoin's a risk-on asset. And I think it's a more leveraged play. Just so you know, my short positions are very small. Like I'm probably on my whole portfolio, like 10% short with a lot of cash and a lot of defensive stocks. So, and maybe closer to 15% short. So we'll see. And these are, I consider these to be very short-term trades. I would be shocked if I hold these for more than a few weeks. I got pretty tight stop losses on them, etc. Because the VIX is going higher, etc. So that's the issue we're going to have now, because with this whole dynamic and the shifting in global trade because of these tariffs, the issue we're going to find ourselves in is these past like corrections or topping formations won't really matter. So what I do kind of want to show you, because I do think the one we can compare this to is the 2020 correction here. And if we go look at the S&P here, let's just go look at 2020. We'll start this in 2019 and we'll go to the end of 2020. Okay. And look, it just kind of, everything's kind of fell off a cliff. This topping formation was a little longer, but you can see it all lasted about a month. And then the VIX spiked and this went lower. And look at all these gap downs, gap downs, gap downs. And it was a V bottom. There was no retest, but it was a different scenario too. It was like COVID, they shut everything down. Then by the spring, they were opening things up again. So, it was a lot different than this. This is something like if Trump kind of pulls back on the tariffs in a month, I still don't think actually we'll see this kind of rally. Because remember all the stimulus that happened. The Fed cut rates to zero. They printed trillions of dollars. They did all those stimulus projects. It's not going to happen this time, right? And if we go look at something like for example, let's look at the TLT. This is a perfect example. Look at the huge rally that the TLT had, and of course, more importantly, let's look where interest rates were. Interest rates, were already low. Like the 10-year bond started the year at 2%, and it was half of 1%, by August of that year. So that's why the Fed could cut rates to zero. Well, if we go look at the TNX now, the 10-year bond now, okay, we have started to fall a bit in yield, but you can see we've gone from 480 to 4. We're still actually in this range, and like being at 4% on the 10-year bond, like that's like only one or two Fed rate cuts, right? They had even when rates were 450, we were still pricing in a couple this year. So it's nothing out of the ordinary. And part of the reason is these tariffs are viewed as inflationary, right? Even though oil is falling and there is going to be some demand destruction, obviously. The cost of goods and services and everything is going to go down. So this is the home builders. You can see they've done really miserably since late last year. And the other thing I want to show you is the transportation index. Now you can see this is completely fallen apart. It is now below or right at the lows of 2023. Actually, it's below the lows. We get a 10-year chart. You can see we're almost at the lows of 2022, that bear market. So, you can see, and it's fallen really hard. The high was near 18,000. We're at 13,000. You do the quick math on that, you're down 30% on the transports. And and we had a Dow 30 sell signal, by the way. We had a quick buy signal here. Didn't quite, because it didn't break the intraday high, but it did go to closing high. But then we had a sell signal right away, because when the Dow continued to make new highs in January, February, you can see the transports did not. And that non-confirmation led to this. And that's the problem with these non-confirmations. We had non-confirmation all through 2022 and 2023, right? But the market kept going higher, but ultimately it tends to work, there you go. So, and so we'll have to see. I think that's enough for now. I don't want to get too much into this. We'll see what happens going forward. Obviously, now we have volatility. If you're someone who likes volatility, this is great for you. I'm pretty relaxed, like I said, because of I kind of, again, I had this lucky situation where I had the Newsmax IPO. I made good money on that. And then now I can just kind of sit, I have these small little positions. I can sit there and wait. I do have like a list of stocks that I want to buy. And some of them I sold. I got stopped out of. Some of them I'm just waiting. They're already super beaten up, and now they're getting a little more beaten up. So I do have this list I would like to buy. And actually, most of the stocks, interesting enough, and this just happens to be a coincidence that I wanted to buy, are somewhat unaffected by trade. And actually, one of them in particular, I think actually would be helped by these protectionist kind of measures, right? So anyhow, there we go. We'll see what happens. Like I said, I think what's going to happen into the open, I'm doing this and I'm finishing this off at 9 a.m., is we're going to see the S&P futures try to hold this 5,000. And then we'll see if they can do that or not. Because, that's a pretty big round number, so it's because, whatever, 4,000, 6,000 is like, whatever, 5,000, there's something about that, right? 5,000 is like 10,000. Those are pretty big numbers. So, as well. So what was interesting, I actually did this poll here just to see the results, and it was 57% of people said yes, 8% said they didn't know, and 35% said no. So interesting, because I think this is really a changing dynamic for the whole global economy and not just trade, but the way you trade and invest. And what I find interesting about that poll is 43% of people are still not going to change the way they invest, or don't know. So that, to me, that's a very high number, considering what's going on, and it really seems to me like we are at like a kind of this turning point here. Now in the markets, you just don't know, because it could take a while. Like, one thing you have to understand is you don't know now. When the VIX is over 40, let's go quickly look at the VIX. When the volatility is this high, when there is fear, you can bottom today, or you could still, like you saw, I showed you 2020. We could still go back down another 10, 20%. We could still go, you're down another, 500 points on the S&P. I don't know. I just don't know, and but like I said, I do have some of these beaten up stocks, and I still own some of my dividend plays, and I'll see how that plays out. And I'll probably by the end of the month get back into some of those things, and just see what happens. I do think at some point in the next month or two, or the next few months, this will calm down. But again, I don't know, will the markets be significantly lower than they are now when it calms down? And we will see like a very good bounce. People tend to forget, when they think about the Great Depression, that there was a very strong 6-month rally from late 1929 into 1930, and if we remember, like in 2001, 2002, there were very strong rallies that lasted multiple months. Like the post 9/11 rally lasted like till March of 2002. Like, it was almost 6 months. It was a very strong, long bear market rally. So when especially if we get oversold like this in this panicky fashion, we probably can have a very strong counter trend rally. But we're going to kind of go through the rubble until that happens. Everybody take care.